If you want to partner with another company, chances are the first question they will ask is it being regulated? Have you received any green light from SC or BNM? If your answer is no, they will not enter any form of partnership, any form of JV with you. So in other words, you do not want to just trap yourself in a situation where you have a project and yet no customer, they are willing to be on board, and then you can't find any partners. How are you going to run any business in isolation? So this is why it's important for you to work very closely with regulators so that they understand your business. You also understand what is the point of view, you understand what's the concerns, and then we all work together to address any particular concerns.
Hello and welcome to the Legal Insight podcast by HHQ. Today, we're diving into the world of blockchain and real-world assets with Ong Johnson, our Head of Technology and Corporate Practice Group, and Khai Yi, our Co-Head of Technology and Corporate Practice Group. Now, they've recently authored an insightful article on this topic. So, Johnson, can we start with you? And can you explain to us what in the world is real-world assets and what is tokenization?
So I think that in order for us to first understand what RWA tokenization is, it's important for us to first recognize that there is no fixed definition of RWA tokenization. The reason is not because we refuse to give a fixed definition, it's because of the evolving nature of RWA tokenizations. Most companies, I would say that all companies, they are trying to understand the limit of RWA tokenization and what could it offer to the world. RWA tokenization can be understood as any asset, whether physical assets, digital assets, tangible assets, or even intangible assets that is from a real world assets that is being tokenized and represented on blockchains. After they tokenize the real assets, digital tokens will then be minted on blockchains. So in other words, this is just like a mirror of the digital twins of any particular asset in real world, and right now it's also being represented on blockchain itself. These tokens can actually be traded, these tokens can actually be managed, can actually be exchanged, and also can actually be being employed on smart contract that is actually being built on blockchains. So the possibility of RWA is actually limitless. And then most companies, for example, right now, one of the largest funds in the US, BlackRock, they are actually trying to tokenize different kinds of assets. It can be applicable for buildings, it can be applicable for financial products like T-bills, so-called government bonds or corporate bonds, or even different kind of investment products that's made available for the public. So technically, RWA is really boundless and limitless, and most companies, whether in Malaysia, company in Asia, or companies that is based in Western countries, they are really trying to explore and experiment what RWA can actually achieve.
Sounds like at the moment, most of the companies actually, bringing off-chain assets to the chain are funds. Maybe Khai, you can just enlighten us, like what are the benefits of tokenizing something in the real world on-chain?
So one of the key features of tokenizations, or rather blockchain, right, is it allows the usage of smart contracts, right? So essentially, smart contracts are programmed code that will just carry out certain tasks, assuming that certain trigger points, or certain conditions are fulfilled. For example, if a party agrees to pay for an object at the value of $5, then naturally, once that $5 is being transferred, the transactions will just take place. So that's a smart contract. Things are automated, and smart contracts take away the need for actual intermediaries in flesh and blood, like you and I, right, to actually facilitate and carry out the change of hands of the subject matter or object that is being transacted. With that key benefit number one comes benefit number two. Because of the utilization of smart contracts, technically you don't need intermediary to facilitate and carry out the transactions. So transactions can take place 24/7. Smart contracts and blockchains, they don't need to rest like us. They don't need weekend, right? Yeah. They don't work 9 to 6 or 8 to 5 on Monday to Friday. You can really carry out, you can make purchases, you can make transactions, execute orders any day you want, even 3 a.m. on a Saturday morning, or 3 a.m. on a Sunday morning. So that comes the second benefit of speed and efficiency. Whatever it is that is being tokenized can be traded anywhere, anytime, however you want. So these two are what I reckon to be the two key benefits of RWA tokenizations.
Yeah, Johnson, do you want to add on these?
So basically, just now he mentioned that the thing about RWA, or I would say that the power of RWA is actually they are actually leveraging the underlying technology, which is blockchain technology. So the one of the key element of blockchain technology is they are going to eliminate the need of middlemen. So a lot of time when you involve middlemen, you have to pay them because they would actually need to verify, to approve, to facilitate, or to just execute any particular transactions.
Yep.
So this will involve costs. So in the event where a smart contract is actually being built upon blockchains, so by eliminating middlemen, you can also reduce costs significantly because all you need to do is just to have a smart contract, and then without any middlemen involved, not only you can improve the speed, you can improve efficiency, and most importantly, you can greatly reduce costs. And the second thing is actually the transparency. So basically, everything happen on blockchains is being recorded on their ledger. So in other words, all transactions is fully transparent as long as you know exactly how are you supposed to have access to the blockchain, as long as you know exactly how are you supposed to actually use blockchains or to view the ledger, you are able to actually see and identify every single transaction that has happened on blockchains. Everything is being traded, everything that is actually being executed is fully transparent. And most importantly is once a smart contract is actually being executed, you are not able to amend the particular contract. You are not able to remove, to delete, or to amend that particular movement because everything is on the chain and is fully transparent. And this is one of the key points that is not able to happen in the real world. Put it that way, I mean, they are full of money inside a traditional bank, but there's no way for you to identify every single movement because banks, they are just not willing to actually showcase or to make transparent of their transaction. But everything that happened on blockchains, be it Polygon, Ethereum, or just Bitcoin, everything is actually very clear, is fully transparent. So I think that is another key element of RWA tokenization. So basically, one of the key elements or the key benefit that's currently being employed or being utilized by all big players, by company, by institutional players is actually an element or the ability for them to actually split big asset into small bite size. Basically, the technical term is called fractionalizations. Just think of a property. Whenever you want to sell a property, you can only sell the property as a whole. But right now, if I'm able to actually tokenize any particular asset, be it a car, be it diamond, be it an island, if I'm able to tokenize it, if I'm able to actually split into small tokens, so it means that I can actually sell, I can actually trade, I can actually distribute, I can actually offer token in smaller size.
Both of you mentioned good points. Speed, efficiency, 24/7 operations, trust, transparency, and lastly, fractionalization. This is a side question, but I just wanted to dive in a little bit about transparency because at least in Malaysia, you mentioned about eliminating middlemen. But in Malaysia, there's this general distrust for products that are not regulated or for products that are not SC regulated or product that are not approved by some sort of authority or covered under PIDM. So can we say that, RWA has limited use case in a country like Malaysia where, regulation is still very much needed for people to actually trust in those products?
When we are talking about trust, there are actually two elements to it. The first element is in relation to are you able to actually trust the transaction? So I think that one of the real use case we are handling right now is actually a crypto fraud case. When a fraud happens, so for example, when you're being scammed by any particular scammer, it's very difficult for you to actually trace the flow of fund, the flow of money. But in our particular case, that transaction, the fraud case actually happened on blockchain. So what happened is because everything is on blockchain, we are actually able to do something called as a crypto asset tracing. We are able to actually trace where is the flow of money and then where does the money sit. So basically, it's something that is only going to happen on blockchain. So this is the element of trust that we are able to emphasize on. But the second element of trust is regulations. So basically, as we mentioned, for every single product, there will be scams, there will be Ponzi scheme, there will be element of mistrust as well. Because the similar products, it can be misused for bad purposes. So right now, I think not only in Malaysia, but all around the world, because of how new RWA tokenization is, a lot of time, the regulators, they are still finding a way to properly govern, to properly regulate these kind of products. And then I don't think that right now the market is mature enough for regulators to step in. But based on our conversations with regulators like SC and BNM, we do understand that they are actually they are actually paying close attention to this development, and there is definitely a real need for this product to be regulated. Otherwise, there is not possible for these RWA tokenizations to actually grow to a size that we want to see.
Yep.
Good insight. So, Khai, maybe let's dive into some real world applications here. I mean, you mentioned about the crypto fraud case.
Yeah.
Do you have other examples of how companies might use tokenization to their advantage?
Yeah. I'm just going to briefly share two examples.
Yeah.
So number one is in the realm of carbon credit, right? Tokenizations of carbon credits. In fact, this is something that some companies are already doing, or rather exploring. For example, if I were to have a reforestation project or any kind of ESG initiative, right, to reduce my carbon footprint, for example, and the carbon that you are able to offset from the environment, you're actually eligible for carbon credit. In a sense, you actually get some certifications, and that certifications can be tokenized, right? So instead of you getting just a certificate, you get a certificate and you get Johnson mentioned a digital twin, a token version of that certificate. So that token itself, that tokenized certificate or that tokenized carbon credit can then be traded just like how you would trade the carbon credit itself. Companies looking to reduce or offset their carbon footprint can then buy this token off from someone else and then retire this tokenized carbon credit, right? In terms of the second use case, that is something that Johnson and I are very familiar with because we are personally involved in that particular project, right? We are currently assisting a client of ours to tokenize the electric vehicle EV loyalty point system. They see that there's great potential in terms of the EV industry in Malaysia. Our client actually see that potential, and they want to help Malaysia to jumpstart the EV adoption rate in Malaysia, right? So they thought, what could be the main key reason that is perhaps hindering people from adopting EV? The availability or the ease of accessibility of charging stations, right? So they thought, why don't we create some form of incentives, perhaps, to incentivize users to use charging stations and also to adopt and be part of the EV ecosystem. Loyalty point is what they came up with. It's a very traditional, a very widely adopted system, loyalty point system. You go to Starbucks, you go to Petron, you go to Shell. They all have their own version of a loyalty point system, right? So in this case, our client is actually trying to create an industry-wide loyalty system through the introductions and implementation of blockchain technology. Essentially, they are tokenizing the loyalty point, which can then be issued to loyal customers in a sense through driving, through participating in events. And with those tokenized loyalty point system, you can actually use those tokens for EV charging. You can actually use it to perhaps service your car, for example, right? You can also perhaps use it to buy merchandise. You can use it to buy spare parts. You can use it to purchase anything as long as it's within the entire EV ecosystem. So that's the second use point that we are aware of. Companies are trying to explore to do right now.
So Johnson, maybe you can share other examples of the potential of RWAs.
Of course. So basically, I think that another two potentials, I would not use the word potential. In fact, the real use case of RWA tokenization that we are seeing, not only in Malaysia, but also happening in Singapore and also the Western countries. The first one is just now what I briefly mentioned, which is real estate tokenizations. So as I mentioned earlier, so for property developers, what they built corporate towers, they built residential towers, they built data center, shopping mall, or hotels. In every single mega project, in every single big projects, the most challenging part is actually not construction, but actually getting the right funding. So a lot of time, in order for them to get right funding, they have to secure funding either from banks, either from one of the financing party, or usually from just one mega big funder. And then a lot of times, people like us, like the common folks like us, we will never be involved in any mega projects because there's just no way for us to invest in any data center, any shopping mall or hotels.
Yeah.
So right now, assuming a data center player or shopping mall players, what they do is they actually tokenize the project. After tokenizing the project, they distribute the offer and they actually sell the tokens to the common folks like us. each of us, as long as we purchase the token, then just by holding the token, we are called as token holder. We will be receiving the rental yield just because we are holding the token. So this will also in a way that provide us passive income. And then this is actually something that's happening all over the world. This will actually allow common folks like us to have a way to actually hold different kind of assets, to actually invest in property. And most importantly, this also shorten the process for property developers to raise funds. Because instead of just looking for one big funder, which is going to be very difficult, they can actually raise funds by looking for the common public. And then this can shorten the process, and then it's a win-win situation for everyone. And then the second way is actually tokenize financial products or investment products. In the investment market or in the financial world, there are plenty of investment products that is not made available for common people like us due to the need of huge investment capital or the huge investment sum. For example, like things like so-called T-bonds or corporate bonds or government bonds. I mean, it's actually difficult for us to have access to these kind of products. So in the event where any funds manager or any institutions, if they have an ability to actually tokenize these products, they can really split these products into smaller units that's more affordable to all of us. So imagine if you want to actually purchase any financial products, maybe the minimum requirement is actually 10 million. But if any particular fund manager they tokenize that particular fund and then they split into smaller size, so maybe each token is only 5,000, that is actually made available to most of the common folks like us.
Yep.
And on top of that, this can also increase market liquidity, and most importantly, they can also diversify the investor base. So in other words, it's a win-win situation for everyone.
So you're saying my dream of being a data center owner one day can be realized very soon?
It's actually possible now.
Yes,
Yes,
absolutely.
correct.
Yeah. So I'm hearing all these things, and as a common folk, right, who has little exposure to RWA tokenization, what makes RWA tokenization viable or a successful project in the use cases that you've seen? Because I think for me, I would call USDT, for example, and RWA, it's US dollars, tokenized.
Yes, that's right.
Tether, one of the most successful use cases. And the reason why that is so attractive to me as a common folk is because it's very fungible. Like I can move that US dollar anytime I want, and there will be demand for it. When we talk about other kinds of products, I'm not too sure how fungible they are or how successful this project is going to be, because I might end up holding the bag,
Yes,
I end
correct.
up just holding a token that has no value whatsoever. So maybe from your point of view, what makes a successful tokenization project?
Well, I think that people, they are going to hit me by saying that. So basically, I think that regulation is a key element. So basically, a lot of times when we are talking about crypto, basically, when you attend any Web3 conference, crypto conference, the moment you mention about regulation, they hit you, they will kick you out from a room, kick you out from a conference hall, because the idea is, for crypto, it's not supposed to be regulated.
Yep.
Crypto is a free land. It's just a dreamland where we do our thing. It's self-regulated. I don't need regulators. But the real world that we are living in, the reality that we have to face, is that everything would need to be regulated to a certain extent. Because we also do recognize that regulations in a way that will limit evaluation, will also limit creativity. But without proper regulations, investor will not be protected. So I think that what happened last year or the year before, the collapse of Luna, the collapse of USD, one of the stable coin, has caused millions of investors to suffer losses. So basically right now, of course, we have to find a good balance between self-regulation and also being regulated by regulators. Because from what we are seeing for investors like us, of course, making money is one of the objectives.
Yeah.
But at the same time, what is the biggest concern is we don't want to lose everything.
Yeah.
This is why it's very important for regulators to just step out and also to step into the scene to regulate, to make sure that whatever offerings, whatever investment product is being offered to the market is well regulated, well protected, to make sure that all the scams, all the Ponzi scheme will be eliminated from this market as well.
Yeah. So a healthy dose of regulation is always good, right?
Yes, I think that is, in fact, I think that it will be almost essential.
One final question, perhaps for Khai to answer. What should companies be cautious of when considering tokenizing their own real-world assets?
Yeah, perfect timing. Johnson was going on and on about the need for regulations, right? And I do agree definitely that regulation is what we need. Like what you said just now, right amount, healthy dosage of regulation would be key to promote the growth of perhaps RWA tokenizations, and iron grip definitely wouldn't work. At this juncture, different countries have different level of maturity, different level of coverage in terms of their regulations towards tokenizations of real world assets. Perhaps tokenizations of security products would be prohibited in certain countries, but it may be allowed in some countries. Tokenizations of land, for example, maybe is prohibited in some countries and allowed in some. So I think for companies looking to implement or rather carry out an RWA tokenization projects should really do their homework, do their due diligence first to find out the underlying asset, real world asset that they are going to tokenize, whether it's allowed in that particular country or not. In fact, we do know based on the work that Johnson and I are doing right now, our regulators, Johnson mentioned SC and BNM, and rightly said by Johnson, they are paying a lot of attention to RWA tokenizations. And in fact, they are holding consultation sessions, they are holding roundtables with industry players to find out a little bit more of what is this thing called RWA tokenizations, right? And what we see, or rather what the gut feel that Johnson and I have, are that perhaps these are early steps or early signs of potential regulations in Malaysia when it comes to RWA tokenizations. It may not be an overarching guidelines or law or legislation per se that just governed all sorts of RWA tokenizations, but it could be specific RWAs only. Maybe like I said just now, tokenizations of securities, right? Or tokenizations of ringgit. Of course, that's CBDC.
Come on.
Right? It won't be done by any Tom, Dick and Harry. So we do think that in the near future, in the near term, perhaps next year, some legislations governing RWA tokenizations will come to pass, will actually be introduced.
So on one hand, we have regulation being almost a vulgar word in the crypto space. But on the other hand, without regulation, there's this growing skepticism of cryptocurrencies from the cases you mentioned, like Luna. So a bit of both, right? Like you mentioned, I'm just happy to hear that, regulators are actually working with those industry players to form a healthy balance for the environment. I mean, one final thought from Johnson, perhaps, like what could general counsels and lawyers do, in this situation where we're sort of in a gray area now. We're floating in this space where, there's innovation and regulation coming into place. What should GCs and lawyers be aware?
I think one of the key advice that we constantly give to particular like companies or GCs, they are really venturing into tokenizations, or be it crypto or blockchain or Web3, is to have a constant and close communication with regulators. The reason because the activities that we are carrying on, as you mentioned rightly, is actually gray area. So basically, we may not have a very clear guidelines towards different kind of RWA tokenizations, especially when we are talking about tokenization of securities, something that is extremely sensitive because it involves a lot of money, it involves a lot of investment, and then one wrong step, and then you'll suffer huge losses. So basically, first of all, is definitely education. It's for you to first understand what RWA tokenization is. In fact, I think that most companies or the most common publics, they do not actually have a proper understanding of this particular topic. So first of all, is to get proper education, and then to make your own analysis. And then if the company has already decided by saying that, look, RWA tokenization is what I want to do. I want to tokenize my building. I want to tokenize my financial products. For example, PE firm can be saying, look, I want to tokenize my fund. The next thing that they are supposed to do is engage a lawyer and then go together with a lawyer to understand what is the current legal framework, and also work closely with regulators. Based on our experience by communicating with regulators, be it BNM or SC, we know that they are extremely friendly. In fact, they are very interested to know what is happening. I mean, they are not here to stop any form of innovation. They are not here to stop your business. In fact, they are here to make sure your business can run smoothly, and most importantly is investors can be protected. The reason is because without regulations, assuming you are the one running RWA business, you are the one running RWA tokenization business. If you want to partner with another company, chances are the first question they will ask is it being regulated? Have you received any green light from SC or BNM? If your answer is no, they will not enter any form of partnership, any form of JV with you. So in other words, you do not want to just track yourself in a situation where you have a project and yet no customer, they are willing to be on board, and then you can't find any partners. How are you going to run any business in isolation? So this is why it's important for you to work very closely with regulators so that they understand your business. You also understand what is the point of view, you understand what's the concerns, and then we all work together to address any particular concerns. So for GCs, for companies, do understand the law, work with lawyers, they are familiar with this market, and also speak to regulators because they are friendly and also they are really here to help you to advance your business and also to protect investors as well.
That's amazing. Thanks, Johnson and Khai. That's all the time we have for this episode of the Legal Insight podcast by HHQ. If you've been listening to us for the past few episodes, do subscribe to us on YouTube, on Instagram, on Spotify, wherever you listen to our podcasts. We'll see you in the next episode.